As coronavirus spreads in the U.S., its economy is likely to face its worst crisis since the Great Depression. And the spillover is expected to inflict long-term damage there and around the world. So, what can be done to reverse the crash? And can the global economy fully recover? This is Inside Story. Hello and welcome to the program. I'm Mohammed Jamjoom. It's the world's largest economy and has enjoyed record growth, but it's collapsing. The U.S. economy could be facing its worst recession in decades, triggered by COVID-19 measures. It shrank by almost 5% in the first quarter of this year. That's the biggest slide since the 2008 financial crisis. Millions of Americans have lost their jobs. Consumer spending has seen its biggest decline in 40 years, and many businesses are going bankrupt. The U.S. has pumped more than $2 trillion into the economy in the past 6 weeks. But many economists say this is not enough, and the worst is yet to come. President Donald Trump says things will bounce back once the virus is contained, and he wants lockdowns lifted fast.
I think there's a tremendous feeling of optimism in this country. I think the third quarter is transitional. We're transiting into, but it's a very transitional period. I think it's going to do good, but I think the fourth quarter is going to be fantastic.
The Federal Reserve Chair Jerome Powell has warned there is significant risk of long-term damage.
The ongoing public health crisis will weigh heavily on economic activity, employment, and inflation in the near term and poses considerable risks to the economic outlook over the medium term. At the Fed, we're doing all we can to help American families and businesses weather this difficult period. When the spread of the virus is under control, businesses will reopen and people will come back to work. We will continue to use our tools to assure that the recovery, when it comes, will be as robust as possible.
The slump in the U.S. is part of a global slowdown caused by the pandemic. The European economy has also suffered a record fall. The Eurozone's GDP shrank by 3.8% in the first 3 months of this year. That's its sharpest quarterly decline since records began in 1995. Germany said its economy could shrink by more than 6% this year. And the president of the European Central Bank warned the Eurozone economy could fall by 15%. China's has declined by a record 6.8%, and Japan's is also projected to contract further. It already faced its fastest contraction rate in 5 years at the end of 2019. All right, let's introduce our panel. In London, Greg Swinson, partner at investment banking firm Brigg McAdam. In Maryland, Robert Scott, senior economist at the Economic Policy Institute. And in Washington, D.C., Jeff Hauser, executive director at the Revolving Door Project at the Center for Economic and Policy Research. Welcome to you all. Jeff, let me start with you. Many of the restrictions that have been put in place in the U.S., now you have this 4.8% contraction that's happened. And the restrictions were put in place before this. Is this only really hinting at how bad things will get?
Absolutely. The second quarter of the economy will probably be the worst in American history. The intentional reduction in economic activity is unprecedented. It's necessary. If anything, it's actually insufficient in terms of how much America is complying with do not stay home orders. But the second quarter, the economic statistics are going to be a bloodbath, and the reality is going to be even worse.
Robert, when will the bulk of the pandemic's economic impact be felt most?
I think we're going to see it in the second quarter, certainly. But we can see unemployment surge to levels, again, perhaps unprecedented. The numbers out this morning suggest that we had an additional 3.8 million workers file for unemployment. Official numbers are over 30 million in the United States. That could be as high as 39 to 43 million, or about 25% of the labor force is out of a job. And that's going to be felt most strongly in the second quarter, but those hangover effects will continue into the third.
Greg, how difficult is it, not just in the U.S., but the rest of the world, to gauge the depth of this decline?
Yeah, I think as the other guests were saying, and we haven't seen the worst of it because when you think about it in the U.S. and even in the U.K., the lockdown and the major changes in behavior in the economy didn't actually occur till well into March, mid-March basically. So, it's really going to be April and May that are the real devastating losses. But we're seeing it. I mean, you could see it already, especially with lower income workers. They're the first ones to get hit here because of the focus on retail and consumer facing businesses, travel and leisure. So, we can see it. I know that a lot of people that are able to work from home don't necessarily experience it, but this is real. It's the sooner we can get back to work, the better. This is devastating on both the European and the U.S. economies and around the world. So hopefully, we have some recovery around the corner. But in terms of GDP numbers, which are backward looking, the worst is yet to come.
Jeff, in just over a month, the pandemic has wiped out all of the job gains in the U.S. since the 2009 recession. I just want to take a step back for a moment. Could you explain to our viewers just how staggering that is?
Yeah, I mean, 2008, 2009 was the deepest economic calamity in the United States, essentially since the Great Depression. And we've gone to that level and likely below it in a month. And what's odd is that while significant mistakes have been made by the federal government, there isn't the same sort of obvious set of villains in the way that the banks and the financial sector were villainous in the lead up to 2008 and the Great Recession. It's the combination of a pandemic and a failed public health response that is leaving people utterly immiserated. And as other guests have said, the consequences are going to be brutal, not just now, but for several months to come.
Robert, many economists believe that job losses may actually be far worse than figures are now indicating. What do you think?
Well, as I alluded to earlier, we have done a survey in my organization that was released earlier this week that showed that the official counts of joblessness probably understate the total number of people who've been pushed out of work and were unable to apply for benefits by anywhere from 30 to 60%. In other words, there's another perhaps 8 to 13 or 14 million workers who lost a job, but for one reason or another couldn't apply for unemployment benefits. So we just have unprecedented levels of unemployment. For comparison, if the real level of unemployment is, say, 40 million workers, that's about 25 to 30% of the total labor force. The peak level of unemployment in the Great Depression was only about 24% of the labor force. And that was in 1933, 4 years after the Great Depression started. We've done this to the economy in the space of about 6 weeks. So the collapse is perhaps deeper and much, much sharper.
Greg, the European economy shrank by a record 3.8% in the first quarter. What does this mean for Europe? And what measures can the European Central Bank take now?
Yeah, they don't quite have the firepower that the Fed has. So I think that's one major difference is the Fed has a lot more, they by some measures have injected $12 trillion of liquidity. I mean, that's 20% of the Barclays aggregate index of bond index in the US. So it's massive injection of liquidity and policy support. But you also have the prior condition of the economies. The US was in great condition after 2 or 3 years of tax reform and deregulation. You had record unemployment and especially record wage growth, significantly for the lower income or the lower quartile of workers, especially. So, the condition of the economy was much better. Granted, the unemployment numbers in the U.S. are staggering, but because it's so short and it was imposed by the government, it wasn't a structural problem with the economy. I expect the recovery in the U.S. to be a lot better. The other issue is that the European economies probably started a little earlier. I mean, obviously you had the problems in Spain and Italy with Corona before it reached the UK and the US. So, you might see some numbers that are worse in the EU or in the European zone because and that 4.8, I mean, the numbers don't really explain it. I mean, it was actually higher because on an annualized basis, it was 14%. So the condition of the European economy arguably is much worse than the U.S. economy, and I think the U.S. economy will recover quickly from when we get back to work.
Robert, it looked to me like you may have been nodding to some of what Greg was saying. Did you want to jump in?
Well, I actually think that the numbers in the second quarter ending in June are going to be quite horrific. The predictions are that the real volume of the GDP will decline at a rate of anywhere between 35 and 40%. Again, this is uncharted territory. I would also add that I'm concerned that the United States, because of the holes in our unemployment system as compared to Europe, it's going to be much more difficult to recover. We're going to lose potentially millions of small and medium-sized businesses. They're just going to disappear. And so I don't think it's going to be so easy to just pop back from this intentionally induced downturn.
Jeff, it also looked to me like you may want to jump in. Did you want to add to what was just being said?
Yeah, I think the European response generally, obviously it varies across countries, has been much more rational in prioritizing keeping workers connected to businesses, especially small and medium-sized businesses. The U.S. small business effort, the legislative effort to keep our small businesses going is way too complicated. It's indirect. And it's underfunded. So while the Federal Reserve is definitely making the significant efforts that Greg mentioned, and it's trying to do the best, the Federal Reserve is not a structure well suited to supporting small businesses. That's not its focal point. What we really need are direct payments to workers through small businesses that keep workers tied to small businesses and allow small businesses to be well situated to return when the public health conditions warrant. And the other thing is America's public health response is completely all over the map. You have states like Florida and Georgia, which are not taking the issue seriously. You have meat packing plants across the country, which have become just horrific depositories of virus and death. We have such a scattered public health response that I think it's going to take a lot longer for the United States to begin to get past the real moments of peril with this virus. I think America is going to be much slower to get physically healthier compared to Europe, and therefore Europe is going to be ahead of the game in getting back to something approximating normalcy economically. You can't fix the economy unless you master public health, and America's public health response has been, frankly, an embarrassment.
Greg, I want to talk for a minute about global value chain hub regions. I want to talk about places like China and Europe. Just how much has COVID-19 struck at the core of those global value chain hub regions?
Yeah, I think there's going to be a reset. You have a couple of moving parts here. One is that some of the dependencies on the supply chain have been exposed, especially with dependencies on anything coming out of China and anything related to the CCP. So I think you're going to have a natural pushback. It started, basically beginning with the cover-up and the deception coming out of China, out of the CCP specifically, but also some of the follow-ons where there's been distribution around the world of masks and other products that have quite often are defective. And I think any sort of dependency that's been exposed by this crisis, not just the criticism of the CCP, but just the dependency overall on a global supply chain, will just, maybe create some sort of a reset where, again, we're not advocating, stopping global trade, of course, but I think just reevaluating the dependency on certain supply chains that can be exposed during a crisis like this. And I'd also argue, to Jeff's point about the health response in the U.S., look, it's a federalist system. We're better designed to operate at state and local levels. And I think that's, some people argue that's a patchwork response. Actually, I think decentralizing and deregulating has been fantastic. The president and the federal government have taken the shackles off the drug companies and the life science companies to proceed quickly with remedies without the regulatory burden that's normally associated with those type of responses. And then you've got a great experiment going on as we reopen, especially. We have an ability to look at 5 different incubators, and even within the states, you know, the response in New York, and even Governor Cuomo even said this. You know, he in many ways regrets the complete lockdown of the entire state, because the policy response in New York, in the city, should be quite different than it is in Buffalo or in the more rural areas. And we see that in Texas, Florida for sure, and quite obviously in Illinois, where most of the state in Illinois is untouched by Corona and the fatality rates, whereas Chicago is suffering, granted. So, you know, I think you have to look at the patchwork argument is really a great experiment of federalism, and that's the way the Constitution designed it.
Jeff, I saw you shaking your head there, so I want to give you the opportunity to rebut.
It's kind of amazing to hear libertarian values amidst the pandemic. Pandemics require strong government response, social democracy, people coming together. The only way you are prepared for public health catastrophes is by having the government fund in advance efforts which are not going to pay off in the market. You don't know what year a pandemic is going to hit. That's why our medical system was not trying to produce coronavirus responses, even though the family of viruses that coronaviruses represent is a well-known threat to human life. But because MERS and SARS were dealt with quickly enough in the past, there was no economic incentive to invest in a response. That's why there's no free market response to either the economic peril of the moment or to prepare in advance for a public health catastrophe. And if you look at a state, I happen to be from New York State, from a suburb of New York City, which is Rockland County, which is being hit extremely hard right now. But the reality is the places which were hit first are the places that have the most international trade. But the places in more rural parts of the state, there's nothing about rural life that really keeps you safe from the coronavirus. You still go to religious ceremonies, you still go to schools, you still have supermarkets and the like, you have public high school sports. You still are in contact with other human beings. You're not living a hermetically sealed life. The only reason why some of those places do not have terrible pandemic yet is because of the stay-at-home orders. And the problem is that if only one state in the United States fails to stay at home adequately, that state can become the hub of the next wave of the coronavirus. You need all 50 states to act in concert in order to keep the total volume of virus down enough in the country that things can return to normalcy. It just takes Iowa or Nebraska being crazy to imperil the entire rest of the country. And frankly, as somebody who's been locked down since March 10th, I really would like to get out of there as quickly as possible. And I am really feeling personally threatened for my family by what red state governors in this country are doing.
Robert, one of the supposed lessons learned out of 2008 was that, especially if there were to be another financial crisis, that small businesses in the U.S. should be helped just as much as big businesses. But the rollout of these programs to help small businesses across the United States, it has been clunky, it has been confusing. Why is that? And has it been effective?
Well, it's a completely broken down system. We know just in terms of the unemployment benefits, by the beginning of this shutdown, only about 20% of workers were eligible for unemployment insurance in the traditional system. Congress stepped in at the last minute. They on the fly completely revamped the unemployment insurance system. They offered greatly expanded benefits, but only for 3 months. And this downturn is clearly going to last longer than 3 months. I think the contrast, again, with Europe is striking on the unemployment side. Europe has a fully fleshed out job retention program where the unemployment compensation is used to pay firms to keep workers on the payroll, so workers remain attached to firms. Here in the U.S., we have this patchwork system where loans are made to small businesses if they can get through to a bank and if they can provide all the documentation. In Europe, it happens more or less automatically. And so many firms in the U.S. are falling by the wayside, and that's why millions of firms are going to go out of business before we come out of this recession in the United States. And our unemployment is going to be much higher than what they see in Europe and other countries around the world.
Greg, whether we're talking about the U.S. or Europe, I mean, even if some parts of the economy reopen, consumer spending won't snap back immediately, will it?
No, it won't. And we've seen that in China already. A lot of the workers are back at it, and you can see it in the traffic patterns in Beijing and Shanghai. And so during the week, they're almost back to what I would call normal levels. But on weekends, they're not. So they're obviously not tapping into the restaurants and any kind of leisure activities. People are staying home. So I would agree with Jeff and Robert that this isn't going to be easy. I mean, this is not flipping the switch back on. But the PPP was actually the first 350 billion was executed quickly. 1.6 million loans were made. Yeah, there's more government in Europe. There's more government action or activity in the economy. The U.S. is not designed that way. It's more reliant on the private sector. But I will say these loans were put to work quickly. And in the U.K., it's a matter of keeping people on the payroll. I know I'm in the U.K. We've been involved with small businesses. It's been really difficult getting those programs executed. So I wouldn't say that it's been, perfect. Yeah, maybe there's a better unemployment system in Western Europe because they actually encourage unemployment. But look, I think the way that they jacked up unemployment benefits in the U.S. was a quick relief to workers. It's important that we did that. It was very helpful. It was the right thing to do to help workers. But paying workers $400 a month in additional benefits, or $600, is going to make it really hard to get them back to work. And we're seeing that in Oregon already, where restaurants want to reopen, but the employees are incented to stay home because the benefits are too high. This happened in 2009 when unemployment benefits were extended, and they shouldn't have been extended, and that just contributed to more anemic growth and really constricted the economy. So I hope the government makes the stimulus. It's important as a relief measure. I hope it's temporary, and I hope it's targeted so we can get the private sector back working.
Jeff, the federal loan program, it's supposed to help companies avoid layoffs, but some of the large recipients of loans have already dramatically reduced their workforces, and it's not always because of the coronavirus pandemic. How come there aren't regulations in place to stop this from happening?
One of the things that my project is focused on is trying to look into the history and practices of the Small Business Administration. America had, even before coronavirus, a growing monopoly problem, and that's only going to be exacerbated by the coronavirus and the way that the biggest companies are getting bailed out most effectively by the Federal Reserve and the smaller companies are not. So what we have had is we have a government that is not designed to help small business. The Small Business Administration has long been a backwater of the government. Only when a wrestling impresario was in charge of the Small Business Administration was the person, when the McMahon under Donald Trump was there, a person who anyone had ever heard of who ran the SBA. It's been a backwater because American politics has been built to favor large companies getting larger. And that's why we don't have the regulations in place to protect small business. That's why so many small businesses are facing dilemmas. That's why the loan system, the PPP, what it functionally did by privatizing the government service and having banks serve as intermediaries between the government and small business meant that small businesses which had substantial lending histories with given banks got priority over small banks that operated, over smaller firms that operated principally on cash. So we saw cash, very prudent small businesses that did not rely on loans couldn't get access to the PPP. And those companies, those small businesses, many of them are probably gone forever, even as they may be the fabric of a community's very existence. So I think the implications just for social life in America and just the communities that are going to be torn apart is going to end up tremendous because of the way the American government is built right now to focus on larger businesses. And that's something America is going to have to address, not only in the short run, but in the medium and long run.
All right, well, we have run out of time, so we're going to have to leave it there. Thanks so much to all our guests, Greg Swinson, Robert Scott, and Jeff Hauser. And thank you, too, for watching. You can see the program again anytime by visiting our website, aljazeera.com. And for further discussion, go to our Facebook page. That's facebook.com/AJ Inside Story. You can also join the conversation on Twitter. Our handle is @AJ Inside Story. From me, Mohammed Jamjoom, and the whole team here, bye for now.